The markets are ripping after a dovish Jerome Powell signals that the Fed will indeed cut rates in September. We'll be discussing that, the latest going on in equities, crypto, Asia, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice, so please do your own research for making any sort of financial decisions. Kev, we had the highly anticipated Jerome Powell speech at Jackson Hole today, his last one as Fed chair, as he will be ending his term in May. It was longer than previous speeches. He really, took a lot of time to address what is going on in the markets, what the Fed is doing about it, their plan moving forward, and quite a bit. It was close to 40-minute speech. It was a doozy, but the markets loved it. They reacted very positively after, a very bearish week. A lot of people were, the markets, everything was just very oversold, big sell-offs across the board, especially in crypto. And it just felt like one of those spots where, like, if you were just going short heading into Jackson Hole, you were on the wrong side of it. But the markets have responded favorably. We see big gains in crypto, with the majors, ETH back over 4,800 after being as low as 4,200 earlier today. Bitcoin went from 112 all the way up to over 117. We see that Solana back approaching 200. Meanwhile, in equities, all of the indexes up at least 1.5%. Tech leading the way, not surprising there. But, what were your thoughts listening to Jerome Powell this morning? GM, Mr. House, good to see you. And, how do you see this kind of playing out, once this initial euphoria kind of takes a little bit of a breather here?
Yeah, I think the fact is markets were anticipating a rate cut in September. Then they had this little pullback in the market because then they realized, oh, we're probably not going to get it. And then now they have to reprice it in once again, right? So there's been a lot of volatility off of low volume back and forth, trying to anticipate what the Fed will do. This kind of guarantees that you're going to get the rate cut. Also complicates some things for central banks, not just in the U.S., but other ones. And I don't necessarily know if cutting is the right thing to do. Probably hiking makes a lot more sense to me. But again, we know that at some point the markets do have to have this relief, right? We got our first cut a year ago. Can probably get our second cut a year later. So right now, what I anticipate going into the end of the month is probably just going to be more bullish price action. Like you said, everything was oversold. Everything needed to be repriced. For the most part, I think that we are still heading into some really bad headwinds come September. But this bounce here makes a lot of sense. That's why I kind of expected that we were going to get some type of dovish outlook from the markets, whether Jerome Powell was or not. But it makes sense, I think.
If you looked across the board, and I even tweeted out yesterday that sentiment was so low, it'd be a real shame if people who just flipped bearish got wiped out, because, we saw on Poly Market, which has become very popular, that their chance of a rate cut, if you had bought, honestly, that was the play, was buying the Poly Market rate cut yesterday, because they had it all the way down to 57%, which if you looked at like CME, they still had it at 75. So I think there's a bit of a, I think CME futures are going to be a better source of truth than Poly Market odds, which could lead to an opportunity there. But, we just saw the sentiment had gotten so bad after that hot PPI report the previous week. Now, listen, a week ago, people were stressed about PPI. Today, everyone's euphoric again. But guess what? Next Friday, we have PCE. And if that number comes in hot, then look out, because all of a sudden the Fed really doesn't know what to do. Like, Powell kept pointing to the unemployment report most recently and the revisions, previous ones, as a big part of why they're planning, why it looks like they're going to cut in September. But guess what? If inflation comes in hot, if it's over expectation, like core PCE next Friday is the median estimate is 2.9%, which is above last month's 2.8. Let's say it comes in hotter than that, which based off the PPI data we just saw, there's a reasonable chance of it. Let's say it comes in at 3 or higher. All of a sudden, the Fed is just totally screwed. Like a cut may just be completely off the table if we get a hot PCE report next Friday. I know that like everyone's like, oh, that can't happen. Well, guess what? It absolutely can. So I think it's a nice bounce today, but man, like things just move really quickly, and that's the main piece of data we get next week. Like we hear from some Fed presidents, a lot of them are turning favorably toward rate cuts, but if if everything is fine and dandy until Friday and PCE comes in at a bad number, like all of these gains could be wiped away in one candle.
Absolutely. And I think that kind of is what's going to happen, right? What I see is Jerome Powell caved, and it's going into a quarterly OpEx. You're going to, push this market up to end the summer. And what's going to probably happen is you're going to still get a pretty good pullback in the S&P and the NASDAQ, the Dow at some point. And it could be the September quarterly OpEx. We were pulling back, around 5% or so in the market. It could be more. It depends on what happens. But with everything that's happening right now, people being euphoric, you always get these last minute run ups. I mean, if you look at 2020, when we had the pandemic crash, the flash crash, you crash from all-time highs, right? And it's very possible that the S&P and some of these over the next week or so continue pushing higher. But then we get into, end of the month, September, and we do have some things that are coming up before the Fed has the FOMC on September 17th. Like you have jobs data that's coming out. And, obviously we know we can't trust that one bit. We really can't. We're firing people left and right if they're telling the truth. And if they're not telling the truth, we're keeping them in there longer than they probably should be. But that being said, if this is some type of market stress relief where bad data comes in and it's like, oh shit, things are actually worse than we kind of anticipated. It's the revisions. That's what I was thinking of. Sorry, I got a really bad headache today. All this bullshit in the market, fart coin price moving back and forth. I'm just done with it all, just to be honest with you. I'm glad it's the weekend. But looking at everything right now with where we're heading into the end of the year, volatility being compressed, the dollar coming down a little bit, equities up higher, bond erosion across the UK, Japan, and the US, you're in perfect situation for absolute reversal. And, I think the market isn't pricing that in one bit. Maybe it comes before.
Here's why I think we're not going to see the reversal is we know that Trump is willing to cook those numbers to look better than they actually are.
Sure.
Right? Like, I mean, just straight up firing the BLS person who is in charge of the employment data, like, which is just so funny because that was bullish for him getting rates down, but don't tell him that. So I mean, like this market, like it's crime season in risk assets. Like they will do whatever they have to make the numbers look better, to make it look like inflation is coming down more than it is, to make, I am guessing that we have in 2 weeks we get the next jobs report. I'm guessing it's going to look better than the previous one.
The scary thing is if they can cook the books this long, you have an election year next year. There's going to be a ton of money coming in. They're going to try and make it look good as possible. You might not get a pullback if you don't get it now. I'll be honest with everyone. This is the only good window for a pullback and a meaningful one to go into the end of the year. Outside of that, pretty sure that Trump, Federal Reserve, especially if it's under his watch, going to have a really easy time, QE just injecting as much liquidity to make this election year look extremely well. So this really is a really important time right now in this market. That's the only weakness that I see. You have to get it though, right? That's the scary part. How's it going to come? If it doesn't come, we might be looking at low volatility for another year. So it's really interesting. House, I've tossed ration out the window. We've lost. Yeah, I agree, man.
Listen, like it or not, like that's just kind of the state that we are in right now. Is like these numbers are going to show, Trump is putting the people that he wants in there. He's looking at firing another member of the Fed for a supposed mortgage fraud, which would be right? Which I guess there's an altercation between her and some other guy like out in the lobby before Powell spoke, like where this guy had to like was yelling at her and had to be like removed by police or something. I don't know. It's getting wild out there. But I mean, you just have to kind of expect and that's what makes it dangerous and why I have a hard time wanting to be fully invested in this. It's like we can get all of this positive data, but at some point, something very well could break. And I think it will. I don't know what it's going to be, but when it does break, everyone's going to panic and the markets are going to absolutely nuke. And so it's like I'm pretty set as far as my exposure to risk, and I'm okay. Like if we get some of these big green candles, I'm okay chopping off 5% here, 10% there, and just moving it to, either cash or a little more Bitcoin, maybe some gold. I don't know. But like just getting myself in a position to absorb a potential nuke that I think is probably coming to the markets. If not this year, then definitely next year.
Yeah, I mean, I'll be honest. I got chased out of my Farcoin position today. I saw it at 81 cents, and I was just like, all right, first time this thing bounces, I'm getting the fuck out of here. And the reason is because I do think that there is this time limit that we're really pushing on a lot of these things. I think we have 2 weeks of bullish price action. That's my personal opinion. I think the market probably tops out right after the beginning of September. You get that September 8th Monday. Maybe that's something happens in Asia, but then it goes into, if you don't get anything there going into OpEx, then you have to look at the September 22nd right after OpEx. And the reason I'm more bullish on that than anything, and why I'm really cautious right now with where my money's positioned, is because Japan is putting in warning signal after warning signal. And you should have gotten interventions last night after 29 or so in the past 2 weeks, and they didn't. And the rates went to 3.23, almost 3.24 all-time highs for the 30-year bond. You're getting bond erosion in the UK, Spain. You're getting it all across the board. And it's like, how come no one's buying their debt? Or are people offloading debt because there's just no liquidity out there and they need to get cash quick? Equities are at all-time highs. It's like I've said, it's a perfect storm if we do want to flash crash the market. I don't necessarily know if that's going to happen, but there is a good chance, given all the circumstances, that, Powell's saying that we're going to cut rates. It's pulled the dollar back and it's made the yen a lot stronger. The yields are not responding as they should. Like Japan is in a really bad spot, and now they have to kind of do this dance with the FOMC coming up in the U.S. And it's like, okay, well, if the U.S. does cut rates, by how much? And do we have to raise rates in response? Otherwise, this inflation and these yields are just going to keep eroding and eroding. And as these bonds continue to go up higher in the yields, we're going to start seeing unrealized losses in the banks that we literally cannot cover. SoftBank, Nordschuken, even UBS to that point. All of those are complicated by what the U.S. is doing here. It's actually made it worse globally, and it's made it better for the U.S. in the short term in these next 2-3 weeks. So it's really interesting. I think it's going to be a fun way to end Q3. But it certainly is going to be very telling of how the rest of this year plays out if, come September, everything flips from this euphoria that we're in right now.
Yeah, I think we probably have the Fed cutting in September. Like, is that to sell the news? Like, this was buying the rumor. Like, the rumor was a lot more solidified today. So does that mean that we sell the news off even harder? Like, we're looking at like the Jackson Hole. I mean, yeah, it's been a pretty, over the years, like for the most part, we see some red after it. So
it's because that OpEx too. It's a big OpEx. A lot of flows change, and you see how people want to be positioned going into the end of the year. And we're oversold on the daily. We're overbought on the fucking monthly, on the yearly when it comes to these markets. So it's going to be really interesting if, this being Powell's last one, if any of this makes any difference in the markets. Outside of that, I got nothing much else to add if you want to look at some charts.
We can look at some charts and then wrap it up. Yeah. I think we saw the main. I mean, I'd be shocked if there was another major move here before the markets close. Now, we'll see what happens with crypto over the weekend. Like maybe this is one of those weekends where the rally and the good times continue. And I certainly, as someone who's still long, would not be opposed to that. ETH all-time high by end of day. I mean,
oh yeah,
it's moving in that direction, like back over 48. That was a nice bounce today. So I mean, it wouldn't surprise me, and we're seeing some of the L2s. Like I know House has a long ARB position. I bought a bag of of ARB a few weeks ago. I like to see this recovery today.
Let's see. Did you freeze on me?
Oh, there you go. Again. You got me?
Yeah, I froze for like half a second.
Okay. Cool. Yeah, so let's go. You got the VIX pulled up. Let's look at that. Let's kind of see what's going on in crypto, and then we can call it a day. Absolutely. I did not get in sub 0.4. Unfortunately, I got in at like 0.45.
So looking at the VIX here, you went all the way to the 50 moving average and you got rejected from it. This is on the daily, right? You can see the massive candle. We're down 13.32% in volatility. Once again, we're in summer. It's summer volatility compression. You're getting very close to an end of a pattern, though, right? And this is why it's going to be interesting what happens next week. I do think that we are bullish for the most part for the next 2 weeks. I think it's more bullish flows than we are seeing, bearish flows. And seeing where this trend line that we've held since May of 2024, that's going to be important, again, when we think of Japan. And seeing where we are now, if this closes somewhat above this blue line or right at it, we're still within valid measures to see this thing end come September 5th. Again, September 5th being important because, like I said, if we are going to top in the market, I think it's going to be in that first week of September. We got 4 days of trading that week. That would be that Friday. And that means that Monday, that following Monday, which gives you the 8th till the 17th or the 8th to the 19th or so, room for volatility in the market as you get closer to that OpEx date. Obviously things are going to be shifting around pretty significantly. August, you do have end of month options as well. So there's a lot that is going into this, but you're coiling up pretty hard. I'm going to remove the EMAs real quick. And you can see that you've been in this pattern since April of this year. Would it be time to break out around there? And if it does, is it a small vol event or is it a big one? We don't necessarily know. We do know that we've been compressed vol for a long period of time. So the move likely would be pretty strong. I think a lot of people aren't necessarily accounting for it, but we're open to it because, again, when you compress volatility that long and you see that something like these banks are losing tons of money and unrealized gains. We also know how much short-term debt is rolling over coming middle of September. You have to be open to some things being rearranged in the market, whether that's the market itself or we're going to see some pullback across the board in different markets globally. But looking at the S&P, you were breaking down. It broke down from this. You broke down from this, and then you bounce right back. You're probably going a lot higher, in my opinion, if they're going to try and crush volatility. You're looking at 6,600. That would be my guess for where the S&P could go to. The NASDAQ obviously is doing something a little bit interesting. If the NASDAQ doesn't start bouncing here, you might be putting in a head and shoulders right here. So we're going to keep an eye on that. Again, I think the NASDAQ for the most part is probably the most dangerous of the indexes out there, considering you have NVIDIA in there. Not necessarily sure if you have MicroStrategy or strategies in the NASDAQ. I'm assuming it is, right? I'm just being clueless here. Mm-hmm. But that's problematic too, which we'll get to in a second, because I think a lot of people are waking up to the Michael Saylor BS. At least on Twitter, people are actually being critical of it now, which I'm very happy to see. And then the Dow, you're breaking out, you're putting up, this is an amazing breakout for the Dow. This is absolutely insane. I think Trump even talked about it today. He's like, yeah, the market shot up 1,000 points. It did, Trump. Nice hat, by the way. Did you see his new hat?
No.
It says everything Trump said was Trump was right about everything. He's wearing that today and just talking, bro. And I was just like, guys, this is dystopian a little bit right here. But yeah, you can see that the markets are bouncing pretty well. You can see that right now the Nikkei is actually at support, so I wouldn't be surprised if it holds. You're going up a little bit higher. Doesn't mean it has to go up to this yellow line again. It could honestly just be the second wave retracement from this wave down, and then you have a nasty wave 3 at some point, which is what I probably would assume. Outside of that, let's pull up one last thing real quick. This is the 30-year bond in Japan that's breaking out. The higher this goes, the worse it is for markets. At some point, if this gets unhinged, this starts going higher and higher, you can almost pretty much expect absolute financial collapse in Japan. So that's just something to keep an eye on. I've been watching that every night for the past 2 weeks. It's probably going to get a lot dicier in the next few weeks. Let's pull up crypto. Bitcoin bouncing here, but you can see that it found some resistance on this yellow line. Not necessarily a bullish indicator there. That's it's bullish if you're bullish on alts, because you can see that a lot of the money isn't necessarily going into Bitcoin per se. You're seeing a lot of money flow into other things. One being Ethereum, which is,
Yeah, I mean, Bitcoin dominance took a pretty sizable hit today. That's for sure.
Which is good for alts, right?
Yeah.
Which, again, I'm very upset that I sold my Fartcoin, but I'm just so fucking tired of just how shitty everything was been for the past, I don't know, 3 weeks. It's one of the worst trading patterns.
How's Kev sold? It's time to long this thing.
I sold at 81 cents because I had to bump it, because I was like, if it goes lower than that, and I thought it was going to lose it. If anything, like if the market stayed flat today, I thought it was going to lose it because there's no reason for liquidity to come in. Honestly, I could buy back in. I don't really want to. I'm going to probably put this money towards volatility or something else. But looking at this here, this gives you a perfect play for things to go higher. Right. As long as this comes down to 57.12, I think that the alts do have a good place to run. ETH is helping you out a lot. ETH hitting all-time highs. Once that hits all-time highs, I don't think it's going to go very high, to be honest with you, over. I think we're going to get it. We're going to cheer. We're going to be very happy. And then the next thing you know, you're going to start seeing it kind of slowly curl over. And then you start seeing some of the other alts pile in.
I have to imagine like it is going to take a lot for it to break above 5,000. Like,
yeah, well, it's such a mental level, right?
Yeah, that has to be such a massive psychological barrier. Like, I don't even know what it would take for it to get over that point.
Pulling up this here Fartcoin, this little bag.
I got the Volcom logo on your chart there.
Yeah, this is a diamond pattern. Usually if you get these at the top of a move, it's bad. You got it at the bottom, usually is a pretty good breakout. You can see that everything's kind of primed for it, but this has been one of the shittiest fucking assets. And again, I'm not saying that because I'm upset that I sold. I'm not upset that I sold. I'm upset that I invested in this thing in the beginning. Like, this pattern was so enticing. It was so enticing how beautiful it was. And this whole time, and I was like, oh, guys, this thing is fucking amazing. We were following this shit from here, Jweb, since the March. And I was like, you know what? I was buying it. I was like, oh, this is amazing. This is amazing. This is going to break out. This is a fucking perfect chart. Then it just goes fucking down here, sucks Jerome Powell's dick, and then it's like, oh, I'm going to pop up now.
I hate to say it, but now we know that since you've, like, it's just how it's going to work, man.
I knew it was.
You're out, so now it's just going to go.
And that's fine. I honestly am just like, I'm looking at it. I think and this is one thing that we have to talk about, and I think we've talked about this in the past. Sometimes in your portfolio, there's assets that you just don't want to have anymore. That was one that was just taking mind space away from me. I hated everything about it in the past like 2 weeks. I'm just like,
I feel you there.
Fucking Kanye fucked me. There's so many things that just happen. I'm just like, man, I'd rather just worry about GameStop and few other ones, and that's it. Just I can put this money in my mind space towards something else. And honestly, I don't believe in crypto going into. I think we're going to see the biggest crypto exodus in the fucking world once Michael Saylor fucks the trade. But I was just like, maybe I can make a couple thousand. I was like, I lost like $200. I'm not upset. I'm not upset, guys.
Man, this is going to happen. ETH is going to finally break all-time highs. Sol is on the move right now. It's going to get close above 200, and then Fartcoin is just going to be right behind it. We're going to break this dollar, and then it's just time to go. It's time to let it full rip. So yeah. Let's see. House, appreciate you chiming in. We're going to hone in on 4 crypto for the rest. I'm with you there as well. For me, it's Bitcoin. I still hold my syrup bag. I like ARB, so I'm holding that. And we'll see if I'm a long-term investor in Fartcoin. Anything else, Kev, that you want to talk about today?
I really don't want to talk about anything else. I'm Fartcoined out with everything, but I do think it's going to go up higher. The reason I sold too is just because at some point you have to know when to cut your losses too, right? And it's not like I had a ton invested in it, but there's things I've wanted to buy for a while where I'm just like, motherfucker, I'd rather put this towards like Quantum or GameStop or UVix or anything of those where I think that there is actual value that's going to come in a low liquidity environment. And I continue to see how people are waking up to the fact that Michael Saylor is like, oh, well, MicroStrategy insiders have been selling off like crazy. And if the price gets below a certain level, they're going to sell and they're going to issue more shares and it's going to bring the price down. And essentially, it's the same thing that GameStop's doing, except GameStop has the cash on hand and Michael Saylor is just dumping it into, a burning fire It's a money pit that he lit on fire, and it's going to come to bite the market in the ass at some point. And I do think that contagion is going to affect all of crypto for the worse. I genuinely do believe that. The question is when, right? I don't blame you at all. Follow the thesis. Yeah, I mean, that's the thing too, right? I've said that I'm not going to be bullish going into September unless it's a low liquidity play. If I got it 2 weeks early, whoop-de-doo, whatever. I'm just going to double down on GameStop or something else like that. But I don't have much else to say. I think we're going to be in this bullish period for a little bit. Volatility is going to be compressed. But at some point, I think in September in that first week, that's the top. That's my balls to the wall. Yeah, what do you call it? You can bookmark this. You can say whatever. But I think that's actually what's probably going to happen.
All right. We're going to end it on that note. Appreciate those of you who joined us today. We'll be back next week, so put those notifications on to let you know when we schedule a stream. Appreciate you all. If you haven't yet, like, subscribe, comment, house. Appreciate you, as always, joining us. Have a great weekend, everybody. Enjoy the madness, and we will see you next time.
Take care, everyone.